Today we're talking about why airlines lease aircraft without hesitation, repetition, or deviation starting now. Leasing has become the dominant method of acquiring aircraft since the 1980s when significant changes in tax laws and the growth of specialized leasing companies transformed the industry. Airlines increasingly prefer leasing aircraft over purchasing them for several key reasons. Looking at the US aviation industry before the 1980s, most airlines opted to purchase their aircraft, taking advantage of tax benefits like the investment tax credit and accelerated depreciation. These incentives allowed airlines to reduce the effective cost of purchasing aircraft by deducting a percentage of the cost directly from their liabilities. However, the 1986 Tax Reform Act eliminated these benefits, making leasing a more attractive option. The Act also restricted the amount airlines could deduct for depreciation, making it less profitable to own aircraft outright. With fewer tax incentives, leasing became a more cost-effective way for airlines to acquire new aircraft. One of the primary reasons airlines lease aircraft is the flexibility it provides. Leasing allows airlines to avoid the large upfront capital expenditure required when purchasing an aircraft. Instead, airlines can lease planes for a fixed term without the need for substantial down payments. This is particularly advantageous for smaller airlines or those with limited cash flow, as it enables them to operate modern fleets without a significant financial burden. Additionally, leasing companies often offer sales and leaseback agreements where airlines can sell their owned aircraft to the lessor and lease them back. This allows airlines to free up cash while still retaining the operational use of the aircraft. Leasing also allows airlines to quickly adjust their fleet size based on market conditions. If demand increases, airlines can lease additional aircraft without the long lead times required to purchase new planes. Conversely, during downturns, airlines can reduce fleet size more easily by returning leased planes at the end of the contract. This flexibility is crucial in an industry subject to cyclical demand and external shocks such as economic downturns or fuel price fluctuations. There are two main types of leases. The first is an operating lease, which is a short-term non-cancelable lease where the lessor retains ownership of the aircraft at the end of the term. Operating leases are popular because they do not show up as debt on the airline's balance sheet, making the airline's financial position appear stronger. Additionally, there is no large initial cash outflow as payments are spread over the lease period. On the other hand, a financial lease, also known as a capital lease, is structured more like a loan where the airline gains ownership of the aircraft at the end of the lease. Financial leases appear on the airline's balance sheet as both an asset and a liability, similar to a purchased aircraft. Leasing also helps airlines manage the risks associated with aircraft depreciation. When an airline purchases a plane, it bears the risk of the aircraft's value decreasing over time. With an operating lease, this risk is shifted to the lessor as the lessor retains ownership of the aircraft and is responsible for its residual value at the end of the lease term. This allows airlines to focus on operational efficiency rather than worrying about the long-term value of their assets. In contrast, if an airline owns the aircraft, it must account for depreciation, which can be significant due to technological advancements and market fluctuations. By the late 1980s, specialized leasing companies like the International Lease Finance Corporation and GPA Group had become major players in the aircraft market. These companies began purchasing large numbers of aircraft from manufacturers like Boeing and Airbus to lease to airlines worldwide. Leasing companies could negotiate bulk discounts from manufacturers, allowing them to offer competitive lease rates to airlines. As a result, leasing became an even more attractive option, especially for smaller airlines that lacked the financial power to place large direct orders with manufacturers. The dominance of leasing companies also meant that airlines could lease aircraft on shorter notice, which helped airlines respond to sudden increases in demand. If airlines needed additional capacity quickly, they could turn to leasing companies to fill the gap. This dynamic led to leasing becoming the preferred option for many airlines, both large and small. In conclusion, airlines tend to lease aircraft more often than purchasing them due to the flexibility, lower upfront costs, and risk management benefits that leasing provides. Changes in tax laws, the availability of financial and operating leases, and the rise of leasing companies have made leasing an attractive option for airlines of all sizes. It allows airlines to maintain modern, fuel-efficient fleets while adapting quickly to market changes without the burden of significant capital expenditures.
If you liked this video, don't forget to hit the like button, leave your thoughts in the comments, and subscribe for more aviation content.